Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brad, and today we're going to be making a new video on M1 Finance. So, I scheduled automatic deposits every single Monday for the foreseeable future of $10. I have a whole video of step by step what I did in order to get that all scheduled. If you guys would like to check that out, go ahead and hit the video on the top right corner. There's be a little video. You guys can check that out and just watch through the process if you guys want to get started on scheduling your investments of just $10. Now, why did I schedule $10 to invest every single week? Well, my portfolio is a dividend portfolio. So the way I've designed this portfolio, it's 15 stocks, and the way that they pay out, I can get a payout roughly every 1 to 2 weeks. Now, the way I have it scheduled, with $10 coming in every single Monday, that means that any dividends that was paid out the week prior, with that $10 deposit, it'll trigger all those dividends and that deposit to get deposited into the account and average down on any positions that I may be down in that day. So over the last couple weeks, like last week, Walmart took a 10% loss and a few others had gone down. So this week we're going to be taking a look at some of the stocks that I purchased over the last 2 weeks. So every single Monday I have that scheduled. And if you are brand new to my channel, of course, I make stock market videos on M1 Finance, Robinhood, and all sorts of other topics. So go ahead and subscribe for all those fun videos. Now, over at my portfolio, I am down 3.12%. Now, am I worried about it? No, absolutely not. You know why? Because just like any other investor, there's no way to time the market. You can see that I have this performance since January 8th, 2018. I have a lot of friends that are saying, oh, you know what, I will invest after the stock market crashes. You can't time the market. You don't know when it will crash. We could have another year of it riding up 10, 20% or so. So I decided, or just anytime I want to begin investing, just get started, put your money in the market, because you don't know if you're at the top or at the bottom. And when you're invested and it goes down, that's great. Now you're buying at a discount. So now you're adding money in and you're buying stocks at a discount prior to, compared to where you initially bought them at, and you're able to average down. You're able to buy stocks that are cheaper. You've already done your research on these stocks. You believe in them for the long term, so there's no issue with you buying them even cheaper than when you initially bought them at, especially if you're investing for the next foreseeable future until you retire. So there's no time to just time the market. Just invest whatever you have to begin investing, and then average down on your investment. If it goes up, great. Now you can't average in, you can't get a lot of those stocks at a discount. But if it does go down, just add to your positions. And the way my portfolio works is you get paid out dividends every 1 or 2 weeks, and then I'm going to begin adding $10 every single week to average down on these positions. So that is the portfolio. If we click on view details, it just kind of goes over. I have 15 stocks. There's no expense ratio, meaning that over on M1 Finance, I have a whole video talking about all the perks of M1 Finance. No fees, $0 trades, partial shares. It's great. With $100, you can invest in Amazon and Google and Apple. So you could have 33.3% of each one of those stocks with $100. Or, you can start with your Roth IRA or IRA for $500 and have 33% of them each. So I talk about all the benefits. If you guys want to check out that video, I'll have a link in the description above over the perks and benefits of M1 Finance and just what you can do with it. Now, what I want to show in this video is the activity. So let's go ahead and click. Well, let's check out the market. So today was absolutely awesome. Monday, last week, Tuesday, the Fed chairman discussed interest rate hikes 3 to 4 times in 2018. Stock market tanked, continued into Wednesday a little bit. Then Trump started tweeting about tariffs on steel and aluminum. That caused the markets to come back down Thursday and continued into Friday, a little bit of a sell-off. So the markets did go down quite a bit, so I bought more shares. I believe I put in like another $5,000 or $10,000 into the market that I had on hand, so I was able to average down. I made up every single I made it all up on Monday, so it's very nice. You always want to average down. You want to have some cash on hand to be able to average down too. So today was a great day. Hopefully it continues into tomorrow. All that happened last week, I believe, was just political. I posted it over Facebook. It was just political. It's a one-time thing. Trump has been talking about increasing and putting tariffs on steel and aluminum for a while, and he's just getting the action on it. So going forward, I don't see any bumps again, but anything that's discussed in the news, political or bad earnings or revenue on a stock, it's going to drive that stock down just because we're at that position right now where just anything negative will impact the specific stock or the market for some reason here. So that's the market. Now let's go to our activity. Now, we currently have 3 cents cash on hand. So that's great. You can see here that I initially deposited $5,500 back on January 8th, 2018. That's when I started on M1 Finance. 13 days ago, or 2 weeks ago, I set up a $10 auto deposit into the account because I had these dividends sitting here not doing anything for my portfolio. I had Blackstone that had paid out $249. I had Apple pay out $139. I had AT&T pay out $505, and I had Caterpillar pay out $1.56. So I had $10.49 just sitting there on the side that wasn't doing anything for me. Eventually it triggered, but I had Apple in that portfolio just kind of sitting there for several weeks. So that's why I schedule these $10 allotments every single week, so I can get that $10, $15, $20 working for me, averaging down on these positions that may have gone down over the last week. So I was able to invest $17.87 into the market. Now I had a little bit of money on hand. That's why you can see here that it says that I deposited $20, and $20 was deposited. Of that, $17.89 was just cash sitting in the account. So it kind of combined $10.49 of dividends, and then it also combined $10 of that auto deposit for a total of $20 that was able to just get deposited into the portfolio, something along those lines here. So $10 and $10.49. So it looks like maybe I had some cash on hand somewhere. So here I was able to make $17.87 of just purchases. So it managed to buy $3.58 of Walmart. It bought $1.44 of Altria Group. It bought $1.83 of Simon Property, and it bought $11 of WP Carey. Now WP Carey is another REIT. They've been getting hammered with with rising interest rates, which is causing their stock to kind of go down a little bit because they do use debt in order to, when you buy property or buy anything, you use debt. So it's been causing them to kind of go down, but I do see them kind of turning around maybe in the next after 2018, but for the long term they're a great stock. They've been paying out dividends for more than 10 years, so good long term buy and hold. So this was on February 21st, 2018. Now 8 days ago we had another transaction. I put in $10 into my account. I had some change kind of sitting in the account, so I was able to deposit $10.02 or $10.01 into the market. So I was able to buy 28 cents of Johnson & Johnson, $4.88 of Walmart, $1.14 of Altria Group, and then another $3.71 of WP Carey. And then of course I don't sell anything. All I'm doing is averaging down on positions that I'm currently down on. So that was back on February 6th. Now today, I just got a notification on my phone that I deposited another $10 into my account. So here, I had $7.41 sitting from last week. Last week, I was paid out $3.60 from Pfizer and $3.81 from Simon Property Group. That's $7.41 I could have working for me this week, but because I didn't hit that $10 threshold, I wasn't able to deposit it into the market. So what I did is I went ahead and deposited $10. Again, every single Monday I deposit $10. That way it triggers my past week dividends, and combines it with my current $10 threshold that I need, and now I was able to buy $17.39 of stocks. So here, Caterpillar may have gone down a little bit, so I was able to pick up $9.44 of Caterpillar, $2.76 of Johnson & Johnson, $4 and a penny of Walmart, and $1.18 of Altria Group. Now you can see these, they've been getting bought. Some of the same ones have been getting bought over and over. That is just because they're currently down. If I go back to my portfolio here, you can see here that these ones that are getting bought right now, they're actually in the negative. So Walmart, it's been getting kind of hammered over the last few days. It's probably down a little bit more than 10% now. I can't just click on it and see here, but it is picking back up just today, up another 1.5 points nearly. So let's go back to the portfolio. So here you can see what the actual percentage is versus the target. So a few of these are over the target rate just because they've done so well. So M1 Finance does not punish the stocks that are doing well, meaning that it doesn't withdraw any money from them. Any of the money that you had deposited into them continues to work for them. What M1 Finance does is when you put $10 or your dividends get invested into the stock market, it averages down on these positions that are in the negative. So Caterpillar was probably in the negative here. You can see it's down 7.86% right now. So it's gone down pretty hard, recently over the last probably 5 days. Yeah, it came down from 163 all the way to 145. So that was a pretty drastic drop right here. Hit its support right around this level here, and then it's been picking it back up. So it is down roughly 8%, but over the long term, is Caterpillar a great stock? Let's take a look at this over the long term. Now, past performance isn't, you don't look at the past performance and say, okay, this stock has done really good over the last 5 years. It's going to continue to do good over the next 5, 10, 15 years. You got to keep up on these stocks because there's a lot of companies out there that have gone bankrupt, like that, were huge back in the past, such as Kodak. Kodak was a huge company, film company, developed so much way in the past, but now they're just a $3 or $8 stock just because they decided to get in the blockchain. So there's a lot of companies out there, and even in the past, there's even more of them that used to be dividend champions, dividend aristocrats that have been paying out for dividends for 25 years, and then they ended up just going bankrupt. They couldn't afford it anymore. Times changed. So that is it right now for my portfolio. You can see that my worst stock right now is probably Altria Group. My cost buy-in was $333. It's now worth $306. There we go, though. So my best one is Lockheed Martin, followed by Apple, followed by Blackstone Group, Pfizer, AT&T, Cisco, Kimberly-Clark, Praxair, WP Carey, Johnson & Johnson, Walmart, Avery, Caterpillar, Simon Property, and Altria Group. So that is it. So when I invest again next week, or if I get some more dividends paid out this week, the dividends are going to get applied to probably Altria Group, Simon Property, Caterpillar, Avery, and Walmart. It'll primarily get invested into these stocks down here just because they are below my cost buy-in performance. So it's going to buy into those stocks, and eventually over time when they begin picking back up, they're going to, because they have more shares in them, it's going to cause them to, I'm going to be able to average down on those positions anyway, so not too worried there. So let's see here, what else? 1 second. Okay, now here's my spreadsheet over on Google. I'm going to keep this updated every single month just to kind of track the progression of the annual income every single month because I'm adding $40 into the account, and then I'm also getting paid out dividends. You're going to see the annual income increase ever so slightly. By the end of the year, I may have an annual income of roughly $200, and that's completely fine. Right now, I'm actually sitting at $179.23, but this is a little bit off due to the actual original amount is off. So I have invested, $5,500, and then I've added $20. I've had 2 scheduled deposits, I believe. So let's go back here. I had 1, 2, 3. Okay, so I have had 3 scheduled deposits. So my original cost, I haven't added in my last today's cost. So I just added $10 into the market. So my original cost of my own money should be right around $55.30. But there's actually more money invested right now just because those dividends are also in play. So the current value of the portfolio, it's showing on my graph at 5336.48. That would include, based off my initial investment in the last 2 scheduled deposits, I believe. But if we look over at M1 Finance, we're actually sitting at 5355. So I'm up more than $20, roughly $20 of the current value it's showing on here. I'm up more than, more than I had invested with the $10 deposit and then those dividends. So $17 was reinvested into the market, but I'm actually up nearly $20 just due to averaging down and those positions recovering a little bit. So at the end of the month, maybe I'll showcase this one next month instead of my other portfolio. Well, my other portfolio is going to be private kind of going forward, but I'll kind of do a video on this at the end of the month and then kind of showcase that if you guys are interested in it. So over here on the right hand side, we're in March right now. So the very first week of March, I had Pfizer payout. Second week of March, I'm going to have Johnson & Johnson. Third week of March, I'm going to have Praxair. And then fourth week of March, I'm going to have Lockheed Martin and Avery pay out. So, and then it's just going to repeat again. Then I'm going to get Walmart, Kimberly-Clark, and such. So it's just a constant payout here with this portfolio, and then those additional $10 every single month. You're just going to be able to reinvest those dividends, and you're going to see this portfolio compound week after week after week. And we're going to see some changes just with, $5,000. If you guys want to invest $500 into your account, you're going to still see a difference. You're still going to see your dividends increase, and when you're averaging it in on those positions, you're still going to see your portfolio increase over the long term. So that is it for this video. If you guys have enjoyed it, remember to hit the like button below. If it was too long, I'm sorry. I tried to get as much information out there without making it too long, but I did want to cover the activity that's been on the portfolio, how M1 Finance averages in, why scheduling those deposits is such a great idea. And that's basically it. Don't try and time the market. Just get invested, average down if you have any losses. Otherwise, ride it up until you do have some positions that go into the negative, and then average down on those. So that is it for this video. I hope you guys have enjoyed it. Of course, if you are brand new to my channel, I do make stock market financial videos weekly, so do consider subscribing for that. As a friendly reminder, I am not a financial advisor or tax professional. The information provided in my videos is for entertainment and fun. It is not investment advice. This is just me as a financial investor trying to help others make their money work for them, looking for great brokers that allow you to invest dividends, have partial shares, and have no fees. So that's it for this video. I thank you guys for watching. Have a great day. Bye.